Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Thursday, October 7th. Great to have you here with us once again. Thanks for making us part of your day. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com. That is where you can find us. Find all of the latest episodes, the links to all the different streaming sources that we are on. We're on everywhere. You can find podcasts and you can find all the latest links at MarketTalkAg.com. Had a pretty decent day in the grain trade here today as we are nearing the end of the first full week of October. Let's talk about it. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here today. Bryan, good afternoon to you, sir. How are you?
Jesse, good afternoon. Thank you. I'm great, and I hope everyone's having a safe harvest so far.
Yeah, we hope that is the case. That harvest pace has really moved along rapidly here, Bryan. And, we think about that. Typically, this is that time of year where we get a lot of that harvest pressure. We make those harvest lows, but this market, it's been doing okay. The last couple of weeks of trade, and today, we started off a little suspect, but we ended up rallying. Especially the bean market finished moderately higher. Corn just kind of been doing what corn's been doing. We were a little higher today. The small grains have really been an interesting story as well. But just overall, what are your thoughts after today's close?
Yeah, nice clawback, I think those are your words you used in the corn, and that's what it did. But you gotta kind of think about what else is happening. At some higher activity in the bean market today, and that's supported by higher energy prices and expectations that soybean oil likely remains somewhat tight. And after dropping 50 to 75 cents a bushel, the market's trying to find some footing there. But look over in the oat market today, limit higher. Uh, so again, the small grains, you talk about small grains, big move in oats. Rarely do oats ever trade premium to anything, but they've got some wheels of life underneath that market because of the drought conditions in Canada this year. Majority of the northern hemisphere crop is in Canada, and all of a sudden you get oats now priced higher than corn. So corn is it's being kind of pulled along by other markets right now. We're hearing, as a whole, I would say we're hearing yield results better in corn than probably most expected beforehand. So whether or not that needle is moving a little bit, in line with or higher than the USDA estimate, or if it's still below that, we'll get another peek at that here in the 12th with some updated data at that point.
Yeah, and that's going to be the big key. It almost seems as well the market's maybe just kind of marking time here, consolidating a little bit as well ahead of Tuesday's reports. But you mentioned small grains, whether it's oats or spring wheat making new contract highs here the last couple of days in December. I've been very It's been very interesting to watch that market. And you mentioned oats trading at a premium to corn. And almost makes a guy wonder, how much longer until the corn market starts to maybe catch up with that? It feels, like that is something that we don't really ever see, and it's very interesting, an interesting dynamic right now.
It is an interesting dynamic. The other thing that you had today too that might be supportive to the markets in general is softer dollar today, even though that has been in an uptrend uh, for some time now. But the stock market has been trading close to 500 points higher on the Dow Jones most of the session. A good strong bounce back there. Consensus on a debt, raising the debt ceiling, I guess, and and I kind of chuckle a little bit because it's, well, either the government basically is falling apart and shuts down, or we go more into debt. It's funny how you can have kind of two negative, and one of them is viewed as really positive. So, nonetheless, that may have had some impact today too. But really, that underlying story of supply disruption, energy prices, fertilizer. We talked about that last week. What does that look like for spring? Just lots of uncertainty right now as to how it may look down the road. So that may be enough to provide support today. At least rational. There's some rational reasoning to think that that's what's happening.
When we talk about supply and demand and the issues there with supply chains and exports, and we had a fairly bullish weekly export sales report today for corn, soybeans, and wheat. We're still, we're watching China. Will they jump into the soybean market? A lot of folks are thinking that it's not a matter of if, it's when, because it feels like the U.S. is the only place to buy beans, regardless of the price right now, in a way. What are your thoughts on that weekly export sales report? And do you agree that it was a fairly bullish report here today?
Yeah, when you look at the numbers, total, now corn, we were looking at today's number, what, 49.8 million
Hmm.
bushels, so about 50 million. If you take the total number needed on a weekly basis, that's greater than the average. But year to date, that's probably the number we want to make sure we follow, 1.046 billion bushels. That's a lot of bushels already on the books for sales. That's ahead of last year's 1.018, and the total estimate this year is a little bit less than last year. So we're talking 2.475. So if you think about it, we're about 40% of the way there, and we're what, 5 weeks into the marketing year. So pretty good start on corn. The bean number today, support of 38.3 million bushels. Year to date number 930 million. Jesse, that is below last year's whopping 1.489. But again, higher prices, I think the end user goes more to buying hand to mouth. It's kind of what you said there. What we haven't seen, we've seen lots of sales, but we haven't seen these big whopper numbers come in and just really kick the door down. I don't know if you're going to see those from any country in particular. China, just because of the nature where beans are priced, they'll continue to buy, I think, as needed. It is harvest pressure. If yields are expected to be what the USDA says or better, the trend in soybeans has been down over the last month, 2 months. And so being patient and being hand to mouth has paid dividends.
I know as well, daily sales, Mexico jumped in again. Mexico continues to be a good buyer of corn and soybeans here from the U.S., and that's at least encouraging as we wait for China to presumably step back into this market more.
Yeah, it sure is. Well, they're a North American trade partner. They've been aggressive. They're buying. We like the way that the trade relations seem to be on track there. So good opportunities there to and to move product via rail as well. So these shipping delays and ships sitting at port or hurricane disruption
Mhm.
delays may not have as much impact. So kind of the opportunity for Mexico to load up on inventories and maybe not have to compete as much with grain typically going elsewhere.
Now, you mentioned the USDA WASDE report coming up on Tuesday, so we got a couple trading sessions before that. We look at these markets here, and I'm sure it'll depend on what we end up with Friday heading into the close, especially China coming off holiday. But what are your thoughts heading into that report next Tuesday, and what are some things that farmers should keep in mind ahead of that?
Yeah, well, keep in mind reports can contain surprises. So if you're on the fence, remember, it's harvest. We're getting pretty good yield results. A lot of this dry crop had timely rains, and so we're hearing some really nice reports from farmers who kind of feared maybe the worst and kind of getting the best right now. Um, so I'm always worried about prices going down or getting some negative news. They did in September. The market bounced back. But if you get another punch like that, it's going to be hard for the market to hold up in the short term. I think farmers too will take a really hard look at what's been sold and if they want to sell any more. That might be one of the things that we want to just address quickly. That if you are behind on sales to where you think you want to be or need to be, go ahead and get a little bit more aggressive. There's not much when we look at prices. I want to just take a quick gander over at prices. When you look at prices, there's not a lot. There's some, but not a lot of carry in the markets. So, and if basis is firm, take advantage of that. Continue to generate cash flow or sell into the new year, but continue to shift the risk. If you really want to own it, there's more than one way to own it rather than just in storage. So you store it. You got, of course, just the physical storage risk. You get the cost to move the grain in your time. You've got the cost of money. You've got some kind of interest cost, which is the cost of money. You've got just a lot of costs with it, and you got the market risk. So there might be a better way to own it if you did want to take in the market risk. Generally, storage is for two reasons. One, get the crop off the field in a hurry, which is a big benefit. And the second is to try and get some basis and or price improvement. Can we get a lot of more price improvement with big crops this year? I don't know. We'll have to see if they in fact are big crops. Likely we'll get some basis improvement, but I've seen people store for 10 months to get basis improvement and give up quite a bit in value. So it's kind of a balancing act.
Brian, let's flip our conversation to livestock. Cattle again today, another strong day. We saw some triple digit strength throughout live and feeder cattle futures. Cash has been steady to a dollar higher this week in some areas. What do you make of this turnaround in the cattle market here this week?
I think I make of it today. I can reflect over to to basically the I'm going to call it relief in the equities and stock market, and just the idea that beef got kind of cheap here. You got a nice inverted head and shoulders formation, got some technical activity, short covering once support was or resistance was violated. Got a bigger trend perspective that still remains higher. We did kind of run into the brick wall here, what, 6 weeks ago. Took it down pretty hard, consolidated. Um, do like the way that it's starting to move a little bit. I don't think by any means we think we're out of the woods yet. We still got to probably look at getting weights down. But if you're a trader and you follow the cattle market historically, you want to buy cattle sometime in the late summer, early fall, typically right around this October window. And I think there's some seasonal trade going on here as well. Good demand for feeders today, despite corn prices creeping back. That was an impressive market today as well.
On the hog side, flipping there, we had a really impressive week last week. We've taken some premium out of this market here, maybe trying to fill some chart gaps. Today, we were mixed to slightly higher, probably some spillover from the cattle market. What's your thoughts on hogs here this week, Brian?
Yeah, thoughts on hogs are that the market is in a consolidation mode right now, probably limited upside. I still want to believe that with ample supplies of corn now, the vision. There will be shortfalls in some areas, but there's a vision of ample supply that if you've got margins that you can work with, and you look at the summer months, $95. I got to think that the idea of contraction doesn't seem real feasible right now. I think that the underlying support for the hog market again goes back to last year and trying to get our bearings on euthanasia and other practices that probably trim the herd down. And at the same time, corn prices were going up last fall. Um, that looks good. Exports have been good this year. We continue to see some nice activity there. The stochastics on charts got much into the overbought territory here 3, 4 days ago, and there's probably some fade of that. That is, when you're in that territory, if it's not moving up, you're likely moving out of your long positions or establishing some shorts or both.
Brian, what about that dairy market? Looking at milk futures prices, butter, cheese prices. What's the latest in dairy? What are you seeing there?
Yeah, so you got a futures market that's really started to come alive lately here. Just when it kind of looked like it's going to roll over and maybe just die, it's had a good bounce back here. It's all demand related expectations that uh, food is starting to become one of those things again with COVID, shipping delays, one of these more valued products. And expectations that we're going to see more demand. Now, the market itself is in a well overbought territory, but we're seeing some really good movement. And a lot of this might be attributed to sort of this mentality or really seeing the industry buy product for the holidays. So, not untypical to see where we see strong cheese prices, strong advances in some of the products in October, November for the well, I'd call it the Christmas season, but you had Christmas, Super Bowl, the January, the whole holiday window. I would say that's probably what you're seeing, maybe along with some speculative interest as well. Um, there is a finicky market. Sometimes it's hard to figure out why we maybe went down. Might be a better question, and we're back to trading where we should be, rather than why have we come up so quickly. Um, we don't think at these kind of corn prices you're growing the herd either.
Well, Brian, a lot of great stuff again, as always, here today. Any other final thoughts you have for us before we wrap up the show?
Nothing out of the ordinary that we haven't talked about before. We got a report coming out this week. Just be prepared for the unexpected. And that's just by definition why there's surprises. Nobody's really looking for it. We're not looking for any big changes, though. We think the crop needs to be fine tuned a little bit. We'll get some better feedback. Probably want to just watch kind of how overseas looks for a lot of markets, including the economic developments in China to see what that looks like. They are just a big player, massive player in the world. They've got to eat, but on the other hand, the question is it protein or is it cereal? And we'll see what they look like here. They have some economic. I'm referring basically to this larger corporation at $300 billion debt, Evergrande, and if that has what they call contagion, that gets to involved in other markets. So be prepared. Sell early, sell often. We're looking at next year. If we can get another 25, 50 cents in corn, probably look at opportunities to start selling.
Contact you guys for a little advice.
Yeah, Jesse, just give us a call. 800-334-9779. That'll be the easiest way just to connect and make sure that we have a conversation that brings value to what's important to you.
Well, Brian, we appreciate the time as always. Have a great rest of your week and weekend, sir. We'll talk to you next week.
Jesse, thank you. Appreciate the opportunity.
Bryan Doherty with Total Farm Marketing. Find them online as well, totalfarmmarketing.com. That's going to do it for today's episode of Market Talk. Find us at markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.